In this video, I'll show you exactly how to trade crypto on OKX, how to navigate this trading screen, and then I'll show you some live trading as well, so you know exactly how to go ahead and enter orders. If you are new to OKX, come up to trade here, and it's spot trading. Now, I've got separate videos on futures trading and a lot of the other features on OKX. I'll leave them down in the description below, plus a beginner's guide if you don't have an account yet that goes through getting set up with an account, how to get money in and out and everything else. I'll leave that for that video down in the description. There's also a link at the top of the description. OKX does a bonus if you're a new user. So you click that link, you can go through, you can get part of the bonus when you sign up. The first thing we need to do is choose the currency pair we want to trade. This is going to be different depending on where you live and which currency that you can deposit into OKX. So for example, OKX is now available in the States. You can deposit in USD. In Europe, it's going to be euros. And you can find those currency pairs and then sell your fiat currency by buying the other side of the trading pair, which is whatever you want to choose. So up in the top left, you can see Bitcoin, USDT. That's what I'm trading. So up here, you can search. So we're going to go to all, and I'm just going to search the ticker of the asset that I want to trade. So Bitcoin's ticker is BTC. And I've got a couple of trading pairs here, Bitcoin against USDT, Bitcoin against USDC, the two major US dollar stablecoins. That's what I can deposit in and use, so I'm going to be showing you against USDT. But if you're in an area that supports fiat currency deposits, then you will be able to see your fiat currency, right? So USD, euros, whatever it is, you'll be able to see that. You can deposit in that currency and then switch it directly for the crypto asset that you want to buy. I'll search for ETH as well. You can see the trading pairs here, USDT, USDC, either of those stable coins is fine. And then you've even got a cross pair here. So some of the major currencies will have cross pairs where you can trade them directly. So if you've got Bitcoin, you can switch it into ETH, or if you've got ETH, you can switch it into Bitcoin via this pair. So if I click this one, you can see the chart changes. ETH has been losing a ton of value against Bitcoin recently. Very clear to see, right? So the exchange rate and the chart between them, this is ETH valued in Bitcoin, and it's getting cheaper, which means that ETH is losing value versus Bitcoin. Now, if this goes back up again, that will mean ETH is gaining value versus Bitcoin. And you can see this is the price between them. So the exchange rate, right? So how many Bitcoin does it take to buy 1 unit of ETH? 0.02 Bitcoin, right? So that's the exchange rate between them. If we go back to, let's say, Bitcoin against USDT, how many USDT does it take to buy 1 Bitcoin? 105,000 almost. So that's the exchange rate between them, and this is the current market price of that trading pair. And each trading pair that you look at, obviously the exchange rate and the history of the exchange rate, which is charted right here, is going to change. In crypto, all prices are quoted in whole coins or whole units. So what we're looking at here is the Bitcoin USD exchange rate. This is the exchange rate right here for 1 whole Bitcoin. But we can trade any fraction of a coin. So when I'm entering my orders, I can trade 1/1000th of a Bitcoin, 1/100th of a Bitcoin, or anything else. We don't have to trade 1 whole coin like in the stock market where you trade 1 whole share. We don't need to do that. Any fraction that we want to trade, we can go ahead and trade. This is just showing us the price per unit, just for ease of comparison. So what we have here is the order book. These are buyers and sellers on OKX who are looking to buy and sell this trading pair, which is Bitcoin against dollars. Down here in green, these are buyers. And so what they're doing is showing us their orders, and they're showing the price at which they're willing to buy BTC. You'll see that all of these orders go down in price. This is the mid price where buyers and sellers actually meet. Of course, anything underneath that are traders looking to buy BTC at lower prices. And so they're down below because there are buyers that are higher than them willing to actually go ahead and trade. These guys are down the list, right, because they're further away from the mid price. And as you can see, the price goes down here. What you'll see is the price, and then on the right-hand side here, this is the amount of Bitcoin that buyers are willing to buy at that price. This may be one or more actual people looking to bid at that price. They can just get aggregated together. So this is the price. This is how much Bitcoin they're willing to buy at that price. Price goes up, and eventually you reach the highest bid, which is the highest bid that you can actually get before actually just buying this guy's Bitcoin. So these are sellers here. They've got Bitcoin and they're willing to sell. These prices, of course, the lowest seller, the cheapest seller, is the most likely to actually trade. So he's at the bottom. These guys are more expensive and they come up here. And again, on the right-hand side, this is how much Bitcoin is available at these prices. So these are sellers here and these are buyers here. We can, using this order screen here, join the order book as well and put our orders in to go ahead and trade. The chart on the left-hand side simply shows a history of the exchange rate of the currency pair that you're looking at. So Bitcoin USD, on the x-axis here you have time, y-axis is price. So price over time, you can see that the price is moving up. What does that mean? Well, we're looking at Bitcoin valued in dollars. So the exchange rate back here was 28,000. It took $28,000 to buy Bitcoin. Now it's 104,000. So the price is moving up. The price of Bitcoin is moving up because it takes more dollars to buy that Bitcoin. And so you can change the time horizon here. I would say for investors, 1 day, 1 week, 1 month is going to be what you want to be looking at. That means the time horizon of the chart is looking at those periods to give you the price action in that period. So if you drop down here, you can edit this as you want. I've got 1 day, 1 week, 1 month. I think they're for most people. If you're day trading, you probably want to go 1 day, 12 hour, 4 hour, something like that, maybe 1 hour as well if you're day trading. What that actually means is the candlesticks that we're looking at, the time horizon of that candlestick is this time horizon. So I'll show you how this works. So for right now, we're on the 1 week chart. And what that means is that each of these candlesticks represents 1 week in length, in time. And so during that week, what happens to the price? The candlestick shows us that. So how candlesticks work are, you open the time horizon at a certain price. So we'll take this green candlestick here. At this open, the price was 68,000. Now during that week, what happens to the price? Well, if the price moves up, then the candlestick moves up and goes green. The price of that week finished at 80,000. So we started at 68,000, we finished at 80,000. That was an upwards move for that week. So open and close of the candle, the price moved up, and so we color it in green. That was all it shows us, an opening price and then the closing price we see there. Same again for this week, opened at 80, it finished at 89, so it's a green week, it's a green candlestick. You can see here as well, if we zoom in, you can see the candlestick wicks here, they're not colored in. That is where the price gets to within that week, but it doesn't close at that price. So the candle body is the open and close of the candlestick. So we'll take this one here. You can see there's a wick here. So we opened at this price because that's the body. During that week, we actually came down to this price here, but we didn't finish there. We actually finished up and green. So that means the closing price was here. So you have an open price, you have a price for the week where you get those wicks, and then you have a close. If the close is above the open, it's green. If the close is below the open, it's red. So in this candlestick, we opened here. The price actually went up during that week, but it actually finished down. So that's what you color in for the candle body, and the wicks are the price action within the week. So that's all it shows. It shows an open, a close, and then the price action within the week. And that's what it shows us for that week. Now, if I go to the monthly, this shows each month price action. And you can see within the month, you can get a more volatile move than within a day, for example. Within a day, the price can only move a certain amount. Within a month, it can move a lot more simply because of the passage of time. So this is now monthly, which means each of these candlesticks is 1 month. If we go back to the 1 day, each of these candlesticks, right click, reset chart, each of these is 1 day. These look like big moves, but actually when you're looking at the chart, the price action is still fairly small. So for most investors, 1 week, 1 month is going to give you a decent idea of what the price action is over time. Now what you can also do is go to indicators, type in moving average here, simple moving average. It's the just the beginning indicator that everyone can use, but it's so effective. So we're going to go to the settings here. We're going to go to inputs, and for length, let's try a 50 period. So 50 period, and then the style, just choose whatever you want. So you can choose white or anything else. And what we're looking at now is a 50 period moving average. Now 50 period meaning it's going to change depending on the time horizon that you choose here. So what I'm looking at here, because I'm looking at the 1 week chart, is a 50 week moving average. What this does is take the price action for 50 weeks, and the next week it drops off the first week and it adds in the 51st week and so on. So it moves along with the price and it smooths out the daily price action or the weekly price action into a moving average of that price, divided by the 50 weeks. And it gives you a smoothed out price movement. And so it's obviously great to see, because what we're seeing here is that the moving average is moving up. That's clearly an uptrend. And of course, the price itself, the candlesticks, are actually above this trend, right? You can see they're actually above it and they're bouncing off of it. Well, that is clearly an uptrend. When the actual price is bouncing off the 50 period moving average, that is a clear uptrend. where the price itself is dragging the moving average upwards. And when you do get drawdowns, as you always do in price action, it's actually bouncing off that moving average, which is very bullish, right? It shows you that even though the price is coming down in a drawdown, there are still buyers here willing to buy, and it's pushing the price up and the moving average up. So that's a very easy way to find a trend that you may want to trade into. I've got way more info on that. I'll leave some videos down in the description on trading strategies, using indicators and everything else. The Crypto Investor course, I'll also leave a link below. It's like 300 videos on trading, crypto, everything else, on-chain analysis, everything you need to know. So I'll link that below as well if you need it. But that's a easy way to show the trend of a chart over time, moving average. And you can change this around as well. You can use 100 period for longer term trends, 50 or 20 period for shorter term trends. Now I'll show you how to buy and sell crypto immediately with a market order, and then I'll show you limit orders as well. With a market order, we don't choose the price that we trade at, we just choose the amount that we trade. So you can see a limit order here, we choose the price. For market orders, we don't choose the price, it disappears, but we can choose how much we trade. So it's like going to the airport and saying, I've got $10, how much of the other currency can you give me? So let's say I want to spend $10. You can see total here. I want total USDT because that shows me exactly how much I'm spending. So this is how much I'm spending. And what it's going to do, it's going to go over to the order book and it's going to buy Bitcoin at the cheapest price possible, which is this guy here. He's showing his order to us and saying, I've got Bitcoin to sell at this price. Now this price will move around a little bit. So we can't know exactly the price that we're going to trade at, but we can be pretty sure it's going to be the cheapest price available at the time that we press the button, which is this one right here, right now. So if I want to buy, so buy, market order, I want to buy $10 worth, I can press buy BTC and order placed, that was it. That's it. Now if you go to order history here, so we go to order history, you should be able to see this one here and it's filled, right? So that was the price, the total fill was $10, it was immediate. You trade immediately and you just take this guy's order for buying. Now if you want to sell, go over to sell here, again, we don't choose the price, but we can choose how much we actually sell. So what I can do here is go to the amount of BTC. I'm going to choose an amount of dollars. That's easier for me because I want to sell about $10 worth, or I want to get $10, right? So when I sell the Bitcoin, I want that $10 to hit my account so I know exactly how much, in dollar terms I have. So sell BTC, I'm selling a total of $10 worth. What I'm going to do now is actually sell to this guy. This guy is a buyer. He's the highest bidder, the highest buyer. So we'll sell to him, sell immediately, sell BTC, and that's done. It's immediate, and you trade either side of the order book. If you want to get slightly better prices for your trades, you can use limit orders, which allows you to choose the maximum price that you're willing to trade at. So for buying, we're going to go buy, limit order. You can see the price we can now choose, and we can choose the amount that we spend. So again, $10. And the current price of Bitcoin is 104,791. I don't want to pay that much. I only want to pay 103,000. So what this is going to do for me is it's going to put my order onto this order book and show it to everyone else and say, hey, I'm willing to buy Bitcoin at 103,000 per unit, and here's my trade size. Now, just because it puts the order on the book doesn't mean I'm going to trade straight away. If our order is too cheap, which it is, then we can't buy straight away because there are other buyers in the market willing to pay much more than us, right? However, we can go onto the book and OKX will work the order for us. So I'm saying I'm a buyer at 103. I'm going to press buy BTC. You can see it's down here. Now it's in open orders. The reason why it's open is because it hasn't traded yet. It's open and it's working. So we've submitted that order to OKX and we've said, I'm a buyer at 103,000. And so put the order on the book. My order will be down on the order book at 103,000. So that limit order is there. And if the market comes down in price and there's a seller willing to trade with me at 103, then we will trade. But until then, my order is just working on the book and it's not actually traded. You can edit this. So you can see the fill and order price. You can press edit here and you can just go, let's say 104,000. So we'll change it to 104,000, press OK. And now the limit order is changed to 104,000. So we've moved up the order book, right? We're now bidding up higher than a lot of other people below us. But again, we haven't traded because the price is still too high for us. So what you can do is you can close this or cancel it right here. Cancel out, that order is gone. Now you don't pay any trading fees for that because you haven't traded. You only pay trading fees when you exchange the assets. But that's how we put a limit order in, but we didn't trade right now. So what you can do as a tip is just go down slightly below the current price like this. And you can see it auto-populates this price right here. And then you can go and choose how much that you want to trade. Now, you can see that my price is still slightly below this price. The price moves around constantly throughout the day. I would say that you have a very high chance of getting your order done because it's only $5 away from the current price. You just get a slightly cheaper price, which is always good. And so I would go ahead and do that, just slightly below the current price. Now, what happens if I put a limit order in that was like above the price, so 105,000, and I said to the system, use a limit order, buy the Bitcoin, my limit price is 105. What it's going to do is trade immediately for us, because what we're saying is buy immediately with my order as long as the price is 105,000 or better, and it is. So what we would actually do on this occasion is, again, like a market order, just buy this guy's Bitcoin, right? Because that's on offer and that's the one that we're going to buy straight away. And so make sure that you put your limit orders in below the current price if you're looking to actually get them on the order book. Otherwise, just use a market order if you want to get the trade done straight away. If you're looking to sell crypto, then you can use limit orders on the sell side as well. We just have to change to sell, limit order. Now this time it's opposite. So if we put a price in down here, again, we'll trade immediately because what we're saying is sell immediately as long as the price is 104,783 or better, where it's 104,784, so it's going to trade immediately for us, right? So with limit orders, we place our limit above. So I'm going to say 105, I want to sell there and sell whatever amount. And then I'm going to press sell BTC. Now you'll see that that limit order comes here again, but this time we're on the sell side because I'm telling the system trade as long as someone is willing to trade with me at 105,000. No one is willing to pay that price at the moment. The highest bid is 786. So again, you can edit this if you want, or you can cancel it out, modify anything you want. So we'll cancel this, and that order didn't trade. But I can go ahead and put any sell order in at any price and just wait for the price to get there a little bit higher and then sell when the market price actually matches our order. Now we'll look at trigger orders on OKX, which allows us to trade in a certain way that market and limit orders don't. So a trigger order is giving OKX a price at which you only then enter a market or a limit order. So with a market order, what we're saying is trade immediately, buy or sell immediately, and that's it. With a limit order, we're saying buy or sell immediately as long as the price is the same or better than the limit that I'm putting in. With trigger orders, you only input a limit or a market order when a certain trigger price is met. And this allows us to trade in a different way. Most of the time, trigger orders are used as stop loss orders, which means you're essentially selling for a loss in order to prevent potential further losses. That's known as a stop loss. So you have TPSL here and trigger, which are actually the same thing. So I'm just going to use trigger because it's easier. A trigger price, this is the price at which your order is placed, right? So you can choose a market or a limit order when you place the order. And it's the market and the limit order will not go onto the system until the trigger price is met. And this allows us to set a stop loss, actually selling at a loss lower than the current price. So let's say I've got some Bitcoin. I bought it at this price, 105,000. I'm willing to take a loss down to 100K, but if it goes to under 100K, I want to get out, right? So I want to take a small loss because if it breaks the 100K support, it may go lower. So what I want to do is tell the system, sell at 100,000, but I can't use a market order because that trades immediately. I also can't use a limit order because if I put a limit order in to sell and my limit is 100,000, it's going to sell immediately because the price is better than that. It's 104, right? So I can't use either of those orders. That's why I use the trigger. What I'm going to tell OKX is I'm a seller, but don't do anything until the price reaches 100,000. That's my trigger price. Now what I'm going to do is tell you at 100,000, what should you do? You can enter a market order at 100,000 to sell, which means I don't choose the price that I sell, and I'm going to choose, whatever amount of BTC that I want to sell. So OKX will wait 100,000 exchange rate, then it will enter a market order to sell Bitcoin and I can press this right here, sell BTC. That order is placed, and you can see it's open orders here, trigger orders, it's right here. So I've got that order in, and it hasn't traded yet, and it hasn't even gone into the system yet. The trigger is waiting for that price to actually hit, to be triggered, 100K, and then it enters my sell order. So I can cancel this out, and nothing is traded. That's usually how it works with trigger orders, is that you're using a stop loss. So you're selling at a lower price, waiting until you get there to sell to prevent further losses. You can also use trigger orders on the buy side, but again, you would literally just use a limit order at that point, right? Because you either want to buy at this price, you don't want to buy higher usually. You can often do that, like if you're trying to trade a breakout, you actually want to wait for the price to go higher. Maybe you can use a buy order in that instance. So you would say trade, trigger order, the trigger price is 120,000, right? I want a market order, I want to buy, $100 worth, press buy BTC. You'll actually wait to 120 to buy. Most people won't use it like that. If you're looking to buy 120, why not buy 104? So it's usually done on the downside where it's a stop loss. You're selling at a trigger actually below the current price. You can also use trigger orders to sell above the current price. So you can put the trigger order in to say sell, trigger, wait till 120,000 and then sell this amount of Bitcoin. But a limit order would work in that instance because your limit would be above the current price at that point, right? So trigger orders really are mainly used for a stop loss, which is you have the crypto asset, you're willing to take some downside, but if it gets to a certain point and you think it's going lower, you want to get out at that point and you want to put the order in the system to trigger at that price. So a stop loss, known as SL here, or trigger, they do the same thing, lets you put an order in and then wait until a certain price before your order gets triggered and actually put into the system. OKX also lets us use trading stop orders as well. These are usually used to sell and to chase the price higher. So what happens here is you're putting a sell order into the system and you're hoping that the price moves upwards. And if it does, your sell order also moves up with it. And so you hopefully get a better price for your trade. So what you have to do is put the order in at a certain price that you're willing to trade at. So let's say the price is 105,000. So 105,000 now, you have to set your variance below that. So let's say you set it 5% below. The worst case scenario is that the price moves literally straight down from the current price, 5%, and then you sell out at 5% lower. However, if the price moves up, then your variance, your sell order moves also up, keeping that 5% distance. And so it can move up with the order, but it never moves down. So if you move up 10%, you get a 10% better trade, and then it moves down 5%, your sell order doesn't move. And so you get triggered at that price. So it's really saying, I'm willing to sell at 5% below the current price, but hopefully the price moves up 20%, 30%, and I keep moving up with it. Right? And I don't sell until it gets that 5% down move. So here you can see trailing stop, you can see the variance, you can put 5, 10, whatever it is, 1%, right? So what I'm saying is I'm willing to sell actually this amount of Bitcoin at 2% below the current price. However, if it moves up, right, 10%, then I'm going to get a 10% better trade from this 2% variance, right? So you can trail the price up, but you don't trail it down. Your order stops. If it moves down, then it actually gets triggered. You can put that in as a sell price. That's a trailing stop. It works when you have assets that are moving up. You're willing to sell, right? You're happy to sell, but you're also saying, hey, look, if the price keeps moving up, then I'm just going to move up with the price. And then if it does move down 2% or 5%, whatever it is, then I'll sell at that price. But you hope that the price is moving up and you're willing to trail it upwards to get a better eventual outcome for your sell order. OKX also have many different trading bots that you can use to automate different strategies, and these are definitely going to help you out. If you go to tools here and then go to trading bots, you can see all of them here. You have spot grids, different smart arbitrage strategies, iceberg and TWAPs. I've got videos specifically for all of those, so I'll leave them down in the description below if you want to figure out exactly how to use them, or you can go back to manual trading to do it yourself here as well. I'll leave the link to OKX as well. If you're a new user, you can get a bonus via that link when you sign up, and all the other helpful videos to trading and OKX down in the description. I'm James, it's MoneyZG. Cheers for watching, and I'll see you in the next one.